Greetings, members one and all of the Salivation Nation. 3 reasons to invest in gold and silver miners. Let's explore. Very rarely do you hear me affirm the word invest with precious metals, but there are ways to do it, for sure, multiple ways to invest with precious metals and actually earn money as an investment, not only in the physical, yes, I have talked about that in the past, but also with other options, and the miners are probably one of the biggest ways to do it with these stocks, with mining stocks, and this article talks a little bit about that. And it is something to consider if you have that mindset. Many of us like to diversify our portfolios, and we diversify by hedging with the physical gold and silver, or in some cases, some people hold both the physical gold and silver as well as the ETFs for gold and silver. But this is a way to be able to go right to the source of where gold and silver comes from, mining stocks. And they've had a tough year, but we're going to talk about this article here from Seeking Alpha and see exactly what's going on so far with some of these mining stocks. We can see here we've got this chart that shows the SPDR gold shares price and change, VanEck Vectors Gold Miners ETF price percent change, and the iShares Silver Trust. And things couldn't have looked better in late May. They saw headlines that we saw here about where the precious metals went up pretty dramatically. Once June hit, gold and silver and miners all reversed course and headed sharply lower, producing a slew of negative headlines. And then the summer slumps, and you've seen them on my channel as well. I've covered some of these topics. But sentiment can change in a hurry. While many traders and speculators are driven and tossed by the latest sentiment shifts and daily headlines, prudent value investors ignore the hype and look at the actual mechanics under the hood. The reality is that the fundamentals overwhelmingly point to higher prices for gold, silver, and miners. And I tend to agree with that, although obviously when you're looking at mining companies, as I've mentioned in when I've covered some of the exploration companies, do your own due diligence and do your research on these companies before you invest. So last year, the money supply soared thanks to massive quantitative easing from the Federal Reserve and enormous government spending. So this chart here is the tail of the tape. We see in purple the U.S. M1 money supply in percent change, and then the U.S. M2 money supply in percent change. We can see how drastically, especially M1 money supply has gone up. Unsurprisingly, consumer price index numbers are soaring as well. May's numbers show a 5% headline number, highest since August of 2008, and the core inflation rate is the sharpest rise in nearly 3 decades. So this inflation is becoming quite concerning, as being talked about all over the media for sure. Consumer price index, all items, and we can see that it is up there for sure in the midst of this recession. Meanwhile, government spending is unlikely to slow anytime soon, as the government continues to invest aggressively in naval and aerospace hardware and technology in order to win the new space race and maintain stability in the Asia Pacific, while also competing with China for AI supremacy. Meanwhile, the Democrat-controlled Congress and the Biden administration are using persistently weak jobs data to support continued COVID-19 economic aid packages, along with aggressive investments in infrastructure. Keep in mind that they've not still spent all the money from the first package that they passed. Given that whenever inflation has exceeded 2% over the past decade, gold has risen. This is a bullish indicator for gold, silver, and miners. And we can see real interest rates are negative, and this was quite surprising to me. And by the way, not only is this good for investment in miners, but it's good for holding the physical as well. Just so you understand, and we'll talk a little bit about the risk for holding physical as opposed to some of the miners, because there's actually some risk there involved too, but much less risk in my view to hold the physical than some of the mining stocks, but there's a great potential there. CPI was a whopping 5% in May. Long-term U.S. interest rates remain well below 2%. And there we can see how they have staggered and sawtooth their way down since about, the 1980s. That means that the real interest rate based off the 5% CPI increase is a whopping negative 3.38%. That's very interesting information there. Real interest rate based on the 5% CPI increase is negative 3.38%. Based on the chart below, whenever real interest rate was negative over the past decade, gold was up significantly every time. And so we can see that 2010 was clearly positive, up significantly. 2011 and 2012 it was up significantly when it was clearly negative. When it was clearly positive in 2013, it was down sharply. And slightly positive, down slightly. Clearly positive, roughly zero, up slightly. 2018, it was slightly positive. It was flat-ish. Interesting word choice there. In 2019, it was slightly negative, but it was up significantly. 2020, roughly zero, up significantly. 2021, clearly negative, and who knows? We'll see what happens. So that is some interesting data that they're pulling from here. I wish they would have shown the actual numbers there to show that. I think that would have been more informative. The third reason to invest in gold and silver miners is that real interest rates will remain negative. As the aforementioned headline indicates, gold, silvers, and miners' latest sell-off is being sparked by new language from the Federal Reserve that indicates that they may be raising interest rates sooner than previously advertised. As ONDIS senior market analyst Edward Moya recently stated, the Fed's hawkish pivot is a major buzzkill for gold bulls and could see some momentum selling over the short term. Short-term Treasury yields will continue to rise, and that should provide some underlying support for the dollar, which will keep commodities vulnerable. That said, this development does little to impact their outlook on precious metals. In fact, likely most people think that they really won't raise these rates anytime before 2023. So, it's interesting indeed. The biggest reason that U.S. government and corporate debt at each of the highest levels in U.S. history and continue to rise with no end in sight is both the government and corporations continue to borrow at unprecedented levels. If interest rates were to rise meaningfully, that would cause a massive economic contraction, as companies would have to sharply tighten their belts and halt growth investments. This would have to be done in order to pay down debt to compensate the higher interest expense, while also reacting to the fact that many current investments would no longer be sufficiently profitable to compensate for the risk being taken on. Furthermore, the government would have to dramatically cut spending, potentially leading to massive layoffs and almost certainly reduce stimulus, which in turn harm consumer demand and the unemployment rate. The political cost of such a scenario would be unbearable for either political party, making it unattainable. So they kick the can down the road. Debt be damned. They just continue to do it because they know they're going to revalue the dollar anyway. The big, giant, great reset is coming. They're already talking about it. We know. So I think they're right. We're caught between a rock and another rock and a hard place at this point with the way things are going. So that means that it's probably going to be bullish for precious metals in the long term. Very interesting information indeed. And I do think that I agree with the sentiment here as to why you should buy gold and silver generally, but maybe even consider investment in some of these miners, because as the price goes up, well, their profits go up and they have much more incentive to explore and find and mine. And so it may be an opportunity for those who are inclined in such a venture. And I've seen plenty in the space that do invest in the miners. Now, the other option is obviously the physical gold and silver. Unlike ETFs, And mining stocks, you have premiums you have to be concerned about. That's the risk. All those premiums are set, and typically they are balanced out at the time of selling your precious metals. For instance, there's insane premiums on silver right now, but more than likely you will preserve some of that, not all of it. In fact, there's probably a greater ratio or spread between what you get for your silver when you go to sell than it is when you buy it now. There is still that there's still some protection than you would have gotten before, when you would typically be given under spot for silver. But still, the spread was narrower when the market was more stable and there wasn't quite as much demand than it is now. So those are things to take into mind and consider. But that spread may be swallowed up by an increase in prices for silver, especially, but also gold. And that's something that people are betting on. It could happen, and it very well could. It's a risk that people take. But I believe in the end, holding physical is wise no matter what the premiums are, because it does provide this level of independence that we're not akin to from the banking system and having ETFs and any digital of anything, even if it's our dollars in a bank account. Well, you never know. I mean, it's highly unlikely, but those things can disappear through a hack or through some nefarious action by our government, where everything is just wiped out for some strange reason. There is that bit of a risk in that area. Again, highly unlikely, but having the physical, it's in your hand. You know where it is. It's right there. And the only threat to that is from burglary or robbery. So there you have it. Let me know what your thoughts are in the comments section. Would like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.